Hey everyone, welcome back to another recap podcast from SNXweave, where we give quick weekly recaps of news and important updates from the previous week from the Spartan Council and core contributors. Let's get started. During last week's sync, the Council discussed some product updates, including SIP 420, which is in its final audit stage. Big things are cooking with this implementation, and we'll be keeping up with its progression, so stay tuned for updates. But just as a refresher, this SIP was proposed by Kane to introduce a delegated staking system where SNX holders can contribute their existing debt positions to a protocol-owned pool, allowing the protocol to manage debt and generate yield while offering stakers better incentives. This is supposed to make staking much easier and more accessible by offering lower risks, higher returns, and long-term rewards, like liquidity incentives and treasury collateral redistribution. The proposal included an allocation of 10 million SNX from the treasury to be used as staking incentives. Bert also posted a great thread about this SIP on X, which we've linked in our blog, so be sure to check that out as well. Next up, as we mentioned last week, the Synthetics Leveraged Token Rally Rewards program is ongoing and is currently in its final swing. We have just entered week 3 of 5, so if you missed out on the last couple of weeks, it's not too late to join. This week, another 15,000 OP and 30,000 USDC are up for grabs. Just mint leverage tokens at leverage.synthetics.io and climb the leaderboard. Weekly rewards accumulate throughout the event, and participants can claim them in their dashboard after week 5. Don't miss out. Speaking of missing out, did you catch the Discord alpha about the free OP bets from Overtime? Synthetics struck a deal last week with Overtime Markets so that the first 250 addresses to trade on Synthetics Leverage for the rest of the week, up until this past Monday morning, would earn a free 10 OP bet on Overtime. Shout out to our friends at Overtime on this collaboration just in time for the Super Bowl. But getting back to last week's Spartan Council sync, the team also discussed how stop loss and take profit order types have been added to Synthetics Exchange, and one-click trading and account abstraction is in the final testing stages. The Arbitrum deprecation is also near completion, and all LPs and traders are being advised to withdraw and exit the system ahead of anticipated liquidation ratio increases to accelerate the wind down. Fenway also brought up how Synthetics is at an interesting point in the protocol's development, as the core mission is changing from being solely a liquidity service to taking charge of the product development. The front end, Synthetics Exchange, has seen a lot of UX improvements, and there are more to come over the next couple of months. He added that Synthetics Vaults as a new product will enable users to execute funding rate arbitrage and basis trade capture strategies, and the plan is to build user-friendly UIs for this product to make it more accessible for typical traders. Also, Fenway announced that incentives for users holding SUSD on Infinex would be doubling last week, with the APY increasing from 25% to 50%. And V4 is coming. Synthetics V4 will deliver a trading experience that is competitive with other on-chain DEXs without making some of the centralization trade-offs that some competitors have had to make. V4 will be deployed on SNXchain, and SIP 420 will free up some liquidity to help get this going via a reduced C ratio, and support more OI right from the launch. Trading and LP activity on V3 on Base will continue, but expect more details about all of this in the coming weeks. Next, the Synthetics Exchange team has been hard at work on some hot new tools and documents. They've listened to your feedback and have implemented an easier way to modify your positions with limit orders on Optimism. The new pencil icons on Synthetics Exchange allow modification through market, limit, and stop orders. You can scale in or out of trades easily using market or conditional orders, all without depositing additional margin. And speaking of Synthetics Exchange, a couple of new perps markets are now live, including Velo by Velodrome and VVV by Venice. Lastly, Synthetics recently posted a thread on X that goes through a performance comparison of Sol Bull 3x leverage tokens, Sol Perps, and Sol Spot. These 3 different ways to long Sol were backtested over a 7-day period between January 13th and January 20th to see which performed best and help users better compare trading options. Coming in third was Sol Spot, with a $1,000 spot buy of Sol being worth $1,324 for a return of 32%. In second place was the 3X Sol Perp Long, finishing at $1,972, representing a 97% return. And coming in first place, winning this performance comparison, was the Sol Bull 3X Leverage Token, finishing at a whopping $2,276 and a return of 128% over a 7-day period. Keep in mind, however, that this comparison does not account for perps funding or trading fees, which can vary from platform to platform. But with all fees being equal in this test, the leverage token was the strongest performer over this time period as it automatically rebalances, taking unrealized P&L to increase the position while maintaining the leverage factor of 3x. And that's it for today's updates. Be sure to check out our weekly recap blog post, share this podcast link, and let us know what you think and what you'd like to hear more about from SNXweave. Thanks for listening.